The rupee's fall, a warning signal for India's economy. The Indian rupee's sharp fall to an all-time low of 88.19 against the US dollar is more than just a number. It is a reflection of the growing strain on the Indian economy amid escalating global trade tensions. The breach of the 88 mark for the first time highlights the vulnerability of emerging market currencies when geopolitical and economic headwinds collide. The trigger this time is the United States' decision to impose a steep 50% tariff on Indian goods, which has shaken investor confidence and sparked fears of a widening trade deficit. While currency depreciation can sometimes make exports more competitive, the sheer scale of the tariff threatens to neutralize any such advantage. Labor-intensive sectors such as textiles, leather, footwear, and seafood are expected to bear the brunt of this move, potentially affecting millions of livelihoods. Beyond tariffs, the persistent outflow of foreign institutional investments fees is adding pressure to the rupee. In a single day, FI is offloaded equities worth nearly 3,856 crore, signaling caution about India's short-term prospects. The simultaneous drop in domestic equity markets further underlines the fragility of investor sentiment. The Reserve Bank of India has acknowledged the risks posed by global trade uncertainties, but has also noted that inflation appears to be more benign than anticipated. This provides limited space for monetary policy maneuvering. A weaker rupee will make imports, especially of crude oil and essential commodities, more expensive, which could eventually pass on to consumers in the form of higher prices, complicating the inflation outlook. Commerce and Industry Minister Piyush Goyal's assurance that the government will support exporters is welcome, but what is needed now is a clear, coordinated policy response. Measures such as targeted export incentives, faster clearance of GST refunds, and strategic trade negotiations with the US could help cushion the impact. Additionally, India must double down on its efforts to diversify export markets, reducing its vulnerability to any single country's trade policies. The rupee's decline is not just a market statistic, it is a wake-up call for policymakers, businesses, and investors. Unless decisive steps are taken to restore confidence, the pressure on the currency could persist, threatening to derail India's growth momentum at a time when stability is most needed.